PantheonAI presents Visa and Mastercard slide revolving light AMD versus Nvidia heats up, stablecoin shakeup, and consumer crisis. Good morning, everyone. Welcome back to the PAI Morning Briefing. It is June 13th, 2025, and I'm John, ready to dive into what's shaping up to be a really dynamic day in the markets.
And I'm Sarah. John, I feel like dynamic is almost an understatement today. We've got a lot to unpack, especially with some of these initial market numbers coming in. It's a bit of a mixed bag, isn't it?
Absolutely, Sarah. Right off the bat, the indexes are, as you said, quite mixed. The S&P 500 is sitting around 6,014.2, up just a touch, about 0.23%. A small positive nod there, which is nice to see.
Right, a little green is always good. But then you look at the Dow Jones, which is down about 0.25% today, currently at 42,474.6. So already a split picture, and then Nasdaq, that's up, right?
Yep, Nasdaq showing some strength, up around 0.5% near 19,557.2. And the Russell 2000, our small caps, also seeing a modest rise of about 0.12% at 2,122.8. So a bit of a mixed bag for equities.
And then, of course, there's crypto. Bitcoin's holding fairly steady, just a slight dip of 0.24% at about 105,473.1. But Ethereum, wow, that's a sharper drop, isn't it? Nearly 3.6% down, sitting around 2,549.2.
Yeah, Ethereum definitely catching some attention there. It just goes to show, even with these modest daily gyrations, there's always a story brewing, isn't there? The market always feels poised for something bigger.
It really does. And speaking of bigger stories, let's talk about some of these major market trends that have been catching our eye. First up, this evolving narrative around financial technology, especially stablecoins. It's been the talk of the town, hasn't it?
Oh, absolutely. And it's not just buzz. We're seeing real market impact. Reports are indicating that shares in financial juggernauts like Visa and Mastercard have actually slid because investors are fretting over stablecoin fears. That's pretty significant.
It really is. I mean, when you hear that major retailers like Walmart are reportedly exploring stablecoin ventures, that's a huge signal. But then, you also have analysts who are skeptical, questioning if these will truly resonate with everyday shoppers. It's this dichotomy, right? Innovation versus consumer acceptance.
That's such a good point, Sarah. It highlights the tightrope traditional financial institutions have to walk right now. And in tandem with that, we're seeing some really interesting shifts in the semiconductor world. AMD, Advanced Micro Devices, is really garnering attention.
They really are. Their progress with next-gen chips has the industry buzzing. Everyone's asking if AMD's newfound momentum can actually challenge Nvidia's long-standing dominance. Some analysts are calling AMD's enhanced chip capabilities a potential game changer. It's almost like a proxy war for tech supremacy, isn't it?
It totally is. And it's not just tech enthusiasts watching. Investors are definitely hunting for that next breakthrough that could redefine market leadership. But on a slightly more sobering note, we need to talk about the American consumer.
Yeah, that's a tough one. The recent research from the Ludwig Institute's Minimal Quality of Life Index, it's pretty stark. Only about 40% of Americans in 2023 earned enough to achieve relative comfort. That's a huge number, and it really fuels those headlines about Americans losing spending power.
It really is a wake-up call, and while some parts of the market try to paint an optimistic picture, the reality is many consumers are feeling the pinch. That said, it's not the whole story, is it? We're also seeing some positive shifts in consumer sentiment.
That's true, John, and it's a welcome silver lining. After 6 months of really dismal outlooks, there are now signs of improvement. Recent reports indicate that Americans, while still cautious, are starting to look up, sensing that maybe the worst is behind us. So it's this mixed picture of steady tech advancements alongside cautious consumer behavior that really keeps the markets dynamic.
It makes for a fascinating landscape, for sure. So let's expand on this a bit, because we've got about 10 key news stories making waves today that really tie into these themes.
Sounds good. And starting with that Visa and Mastercard story, it's been repeated across so many outlets. The fact that their shares are sliding amid these stablecoin fears, it's just so telling. It's not about whether digital payments are inevitable. It's whether these measures will actually yield returns.
Exactly. And with Walmart, among others, showing interest in launching stablecoin projects, the big question is, Will this tech-forward strategy capture consumer interest as robustly as traditional card transactions? Is this current sell-off just a mild overreaction, or is it a harbinger of more systemic challenges for the financial sector?
That's the million-dollar question, isn't it? And speaking of challenges, let's revisit that ongoing discussion about AMD and Nvidia. AMD's new chips are showing such promising performance. Some industry friends are even saying this chip isn't just a technological upgrade, but a strategic move that could really undermine Nvidia.
Oh, absolutely. And if AMD can give Nvidia a real run for its money, maybe Nvidia will finally have to admit it's time to upgrade its game. Or at least its jokes about graphics so good they need a warning label. It's lighthearted banter, but the stakes couldn't be higher, especially with companies trying to diversify their supply chains.
That's a good point about diversification. Now for the third narrative, that sobering reality about American spending power. The Ludwig Institute's report that only 40% of Americans could secure a comfortable lifestyle back in 2023. That's a huge wake-up call for policymakers, too. Are measures evolving fast enough to bring real change to everyday consumers?
It truly is, and it makes that fourth point, the improvement in consumer sentiment, such a critical positive outlier. After a half-year slump, this uptick is a welcome sign. It suggests that perhaps the government and central bank measures are starting to bear fruit. It's a delicate balance, though, isn't it?
It really is. Investors and policymakers are watching keenly to see if this is the start of a larger recovery. Fifth, when we talk about financial innovation, we can't ignore the ripple effects on the broader tech landscape. There's this inherent tension between innovation and regulation. And it's not just about market shares. It's about crafting a secure future for financial transactions.
Right, and it's almost comical how quickly even the most established players are having to adapt. It's like trying to fit into your favorite pair of jeans after the holidays. Sixth, there's also an underlying story about emerging global influences. The U.S. market is often seen as a bellwether, so our consumer spending habits, tech leadership, and financial strategies ripple across the globe.
Exactly. Asian markets, European investors, emerging economies, they're all watching. Will they mirror these trends or forge their own path? Only time will tell. Seventh, back to semiconductors, it's still high stakes. AMD's progress really is a potential pivot point. This sector is always a blend of cutting-edge science and high finance, and it feels like a college sports rivalry heating up.
A college sports rivalry. I like that. It definitely fuels innovation. Eighth, banking and digital currencies. With stablecoin projects still early, their long-term viability is a huge question. Will retailers like Walmart become the standard bearers? Or will it be like a recurring episode of an old TV show, leading to more chaos than clarity?
That's a great analogy, John. These questions are vital for investors. The hesitation we're seeing with Visa and Mastercard suggests that while the future is promising, there's a lot of work needed to build consumer trust. Ninth, we have to consider the broader macroeconomic factors.
Absolutely. That interplay between inflation, wage growth, and job creation, especially with consumer sentiment showing improvement, will be critical. It's like trying to solve a jigsaw puzzle where the picture changes every time you look away, isn't it? Technology and consumer realities are really intersecting in a complex way.
That's so true. And finally, 10th, the international implications of all these trends. When U.S. markets show a mixed performance, it sends signals everywhere. Global asset managers are closely watching our consumer sentiment and tech innovation because it dictates cross-border investments.
It really underscores how interconnected everything is. No market operates in isolation anymore. So having walked through these key stories, let's transition into a more detailed sector analysis. Technology, for instance, we're at such an interesting crossroads.
We really are. The semiconductor sector, with AMD's progress and the challenges to Nvidia, is undergoing transformative changes. It's not just about faster chips anymore. It's about creating entire ecosystems for AI, gaming, everything. Tech companies are rethinking their whole strategy, moving away from old paradigms.
For investors, that means really keeping a keen eye on companies not just delivering earnings today, but those positioned for long-term breakthroughs. Shifting gears to the financial sector, the adoption of new payment methods like stablecoins is a central theme. Traditional institutions like Visa and Mastercard are grappling with preserving their core business while integrating these digital innovations.
And their recent share price movements really reflect that market impatience. Investors get wary when established names face uncertainties, and those broader discussions about stablecoin viability are impacting overall financial stability. It makes you wonder, Will physical credit cards eventually give way to blockchain, or will it be a hybrid approach?
That's a fascinating question. Now, the energy sector admittedly hasn't been as loud in the news lately as tech or finance, but it's still a cornerstone. Energy prices, policy changes, global demand, they all ripple through investor confidence. We're seeing this slow but steady progression towards decarbonization and sustainability.
Right, ESG factors are really coming into play. Investors are watching energy companies adjust their models to meet new regulations and consumer demands for greener alternatives. So even on quieter market days, energy plays a critical role. And back to finance, specifically banking and digital payments, the stablecoin ventures have huge implications.
They really do. There's that natural tension between security and the push for innovation. The evolving nature of digital currencies is compelling banks to rethink their risk profiles, explore new partnerships, and Walmart's move into stablecoin development, it signals that the future of payments might just lie at that intersection of fintech innovation and traditional banking stability.
It's a huge signal. And taking a step back to global market implications, these sector trends aren't confined to our domestic walls. Global markets are so sensitive to even minor shifts in U.S. conditions. If large-scale stablecoin initiatives take off here, it could spur rapid transformations worldwide.
Conversely, if consumer spending power here continues to squeeze pockets, international investors might become more cautious. It's a really clear lesson in global interconnectivity. And on that note, expert insights are already flowing in.
They are? Many experts are predicting that while these technological shifts will likely lead to more short-term volatility, they're paving the way for a more resilient and adaptable economy in the long run. They're saying current market fluctuations are just part of a normal ebb and flow during substantial change.
Yeah, I heard one seasoned analyst quip that the market is like a roller coaster designed by engineers who have a penchant for surprises. I thought that was pretty spot on, capturing both the unpredictability and the calculated risk.
It really is. And those same experts are urging investors to maintain a balanced portfolio, embracing both the potential of trailblazing tech companies and the stability offered by more traditional sectors. Diversification isn't just a cliche. It's a strategy that stood the test of time, especially in these dynamic markets.
Exactly. Tech and semiconductors might yield big returns, but sectors like healthcare, consumer staples, and even energy provide a kind of insurance policy with their steadier growth patterns. So as we start to tie these themes together, Sarah, I think we should leave our audience with a few questions to ponder.
Oh, I love that. So first, are the advancements in chip technology just a temporary blip? Or are they indicative of a long-term shift that could redefine computing as we know it?
That's a big one. And in a world where retail giants are embracing digital currency projects, how should traditional players balance the lure of innovation against potential pitfalls? It's a huge strategic question for them.
Absolutely. And crucially, as consumer confidence begins to rebound, can policymakers and businesses really work in tandem to ensure this positive sentiment translates into meaningful gains in everyday spending power, rather than just pie-in-the-sky optimism?
Those are fantastic questions to sit with. So in summary today, we've really seen a patchwork of market dynamics, from those modest gains and slight declines in major indexes to the bustling conversations around stablecoins and semiconductor rivalries.
And that story of Visa and Mastercard's challenges really underscores the tension between legacy systems and the future of fintech. Meanwhile, AMD's progress offers such a tantalizing glimpse into the next phase of technological competition, which could totally reshape how investors view value in tech.
And even as a significant segment of Americans faces dwindling spending power, that cautious yet welcome improvement in consumer sentiment gives us hope that a turning point is on the horizon. And let's not underestimate the broader global implications of these domestic narratives, which continue to reverberate across continents.
It's true. As we wrap up this edition of the Morning Briefing, it's crucial to remember that while the market may seem like a wild ride, there's always a method to the madness. The steady progress in technology, the cautious moves from financial institutions, and the bittersweet news on consumer economics. It all combines to create an environment that is as challenging as it is opportunistic.
Every day presents new data points, new perspectives, and our mission here at PantheonAI is really to help you navigate through this complex tapestry of information. Before we sign off, I want to leave you with a few key takeaways. The market continues to display resilience amid uncertainties.
And technological innovation is driving fundamental shifts that investors should absolutely watch closely. Despite some sobering stories about consumer spending power, there are bright spots, like that improved sentiment and potential breakthroughs in various sectors.
Exactly, and these trends always leave us with open-ended inquiries, don't they? Will stablecoin ventures truly revolutionize retail, or are we witnessing just another fad? Can AMD's leap forward translate into a long-term competitive edge over Nvidia, or will the chip battle settle into a new status quo?
And perhaps most importantly, how do all these shifts ultimately affect your investment strategy as you look to safeguard and grow your portfolio? I really encourage all of you to think about these questions as you go about your day.
The landscape is changing fast, and every investor, whether you're a day trader or a long-term strategist, has a role to play in this evolving narrative. Remember, the journey of learning and adapting in the financial markets should be an ongoing dialogue, a conversation that's as insightful as it is engaging.
Absolutely. Thank you for joining us on today's morning briefing. A big shout out to PantheonAI for being your information co-pilot, helping you stay ahead of the curve while making the intricate world of finance a bit more manageable.
Join us again tomorrow for another deep dive into the trends, insights, and forecasts that matter. And as always, feel free to drop in your questions to our AI co-pilot if you need further clarification or guidance. Until then, I leave you with one final thought. Learning shouldn't feel like a full-time job. Have a great day and happy investing.
PantheonAI, your information co-pilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.